Hey everyone, welcome back to Corporate Decoder, the place where we decipher corporate filings so you don't have to. Today we're diving into a filing that smells a little bit like a company trying to avoid getting kicked off the stock market, kind of like trying to stay in the cool kids club. We're looking at an 8K filing from BioSig's Technologies. Now, an 8K is basically a company shouting, hey, something important happened. This one's shouting about a potential problem with their stock listing. The main issue is that BioSig's stock price has been struggling. NASDAQ, the stock exchange they're on, requires a minimum bid price of $1 per share. BioSig's stock hasn't been above that for a while, specifically for 30 days straight from late February to early April of 2025. It was below that $1 mark. So NASDAQ sent them a letter saying, hey, you're not meeting the minimum price. They've been given 180 days until October to fix this, or they risk getting delisted, which is essentially being removed from the stock exchange. This is what's known as the compliance period. To get back in good standing, BioSig's stock needs to trade at or above $1 for at least 10 days in a row before October. If they don't manage that, they could get an extension if they meet other requirements like the value of shares held by the public and meeting basic standards, but excluding the price. They might also do what's known as a reverse stock split to increase the price, which basically means merging existing shares to create fewer, more valuable shares. If NASDAQ thinks BioSig won't be able to fix the problem or doesn't qualify for more time, they'll get a notice that their stock is going to be delisted. At that point, BioSig can appeal, but there's no guarantee they'll win. For now, BioSig's stock will keep trading on the NASDAQ capital market, as long as they meet all the other requirements. Now, what does all this mean? Well, a company trading below $1 often signals some underlying problems. It could be poor financial performance, lack of investor confidence, or industry-specific challenges. The risk of being delisted can further hurt the stock price as investors worry about the stock becoming harder to trade. So what's my take on BioSig? The fact that they're facing a delisting warning isn't a great sign. While they have time to turn things around, the pressure is on. They need to show investors some positive momentum, whether that's through improved financial results, strategic partnerships, or some other catalyst that can boost their stock price. Otherwise, they risk getting kicked off the NASDAQ, which would make it even harder to raise capital and grow their business. Whether they can avoid it is something we cannot predict, but you can hit that subscribe button so you'll find out as soon as we do. Also, don't forget to like and comment to let me know what you think.